Brian Jacobsen, Allspring Global Investments Senior Investment Strategist. Brian, it's great to see you again. So I guess first, just your reaction to the moves that we're seeing today and what you're expecting to see over the final weeks of the year.
Yeah, it's been a little interesting. When I came in this morning, it kind of looked like we might have a positive tone to the markets, and then it went negative. A lot of that was more, I think, around what happened with the COVID zero policy in China. Things were looking good as far as with reopening plans, but then suddenly they decided to shut down a city, and there goes those plans, right? And so you've got these countervailing forces where some optimism about reopening, but still some lingering pessimism around how sustainable will any of this reopening growth spurt that we might get be. So it seems like that might be the story between now and the end of the year. Going into the end of the year, we have taken a little bit more of a actually constructive stance on the markets. We've been pretty defensive so far here at Allspring on my multi-asset team, but we're actually getting a little bit more optimistic as we look forward to 2023.
And what's making you optimistic? Because, we heard some hawkish words from San Francisco Fed Chief Mary Daly saying it's way too early to call inflation a turning point and that a 5% rate peak is a good starting point, but they could go even higher.
Yeah, so the Fed isn't necessarily your friend in this market. The Fed could be your foe, which can make it very difficult to navigate this type of environment, but they can also change their tune pretty quickly. So the reason for some of our optimism going into 2023 is because a lot of the risks that are out there, Fed tightening, China's COVID zero policy, Russia-Ukraine war, these are all known risks. And to an extent, maybe those are already priced into the market, right? We know that there are elevated recessionary risks going into 2023, but this will perhaps be one of the most well-telegraphed recessions in history because everybody's been talking about it. And if everybody's been talking about it, maybe it's already reflected in equity prices.
Meanwhile, Brian, you say we're already experiencing a, quote, roving recession. Where do you see that specifically?
Yeah, so looking at some of the history of how recessions have played out in the past, it typically starts with housing. It goes from housing to durable goods, like cars, washers, dryers, then to non-durables, and then to services, and then finally with employment. Well, when I look at what's happened over the last, say, 6 quarters, we've had 6 quarters in a row of housing actually being in a recession. So real activity falling. 6 quarters in a row of non-residential structures. So kind of what businesses might be building, right? Those have been declining. We've had 3 quarters in a row of durable goods or non-durable goods declining, 2 quarters in a row of durable goods declining. So it's like, everything's already been declining. The only sources of strength have been like services spending, also exports have been pretty good, and then big swings in inventory. So in a way, maybe we've already had a recession.
Brian, I want to ask you about one of the big stories of the day, and that's Disney. It's an outperformer in today's market. Shares up just about 6%. They did spike over 10% earlier today. Bob Iger returning as CEO. I'm curious, just from your standpoint, from an investor standpoint, I guess, how do you typically look at leadership changes like this, and what does this signal to you as an investor?
Yeah, great question. And actually, I should preface this by saying, so in some of our funds, we might have exposure to Disney. And in fact, I think in one of our factor enhanced defensive funds, we might have an exposure there. But in terms of leadership changes in general, that's something that we like to follow very closely because it's something that isn't necessarily always captured in the data when you look at it. So if you get managerial changes in strategic direction, right? I mean, that can be a real catalyst for unlocking value for any company. It can also be a way to destroy value depending upon the quality of the leadership change. So, corporate governance, leadership changes, these are really key things for investors to follow. And I think that it's also one of those wonderful areas for like active managers or people who are more into the qualitative aspect of investing as opposed to the purely quantitative, where they can really shine and where they can really kind of figure out what's the vision, what are they going to be looking at, and how are they going to navigate this challenging environment.
All right, Brian Jacobsen, really appreciate all that information. Appreciate you joining us. Coming up.